Hello, everyone. Happy Friday. Happy Friday to you, Patrick. Good morning, Patrick. How are you doing? Good morning, Sterling. Good morning, Mark. There you go. We'll get to all the numbers in a second. Thank you for posting them yesterday. Traders see the Fed cutting rates once no earlier than June after strong economic data. Well, look at Fed Watch. I know some things are showing October. If we look at the Fed Watch tool, it has the pause now through June, and then a slight odds of one cut in July. So and some things have the no cut till October. So keep that in mind too, right there. Again, good morning, everyone. We'll get to the payroll numbers in a second. I'm just scrolling through the comments here. No problem, Sterling. You get to have a day off. I wasn't planning on doing a live stream, but silver hit the first target with cycles at a potential top, so I wanted to alert people to that if you're trading silver. That's why I really did it. And Bitcoin was trading as a key critical level. So far, it's held. What else do we have here? Yeah, 30 years are above 5. The 15-year is climbing. I mean, the 10-year to 15-year. The 10 years climbing. We got some earnings, which we'll go over in a second. Good morning, Ted. Good morning, Jacob. Hello, Charles. Good morning, Eric. Good morning, McRangers. Again, thank you everyone in the background for tuning in too. If you're watching on X, thank you for tuning in. Again, I get the comments from YouTube, so if you ever want to make a comment, just jump over to the Pat Trading Partners channel on YouTube. Good morning, Royal Palms. So, what do we have here? We have non-farm payroll, which is a huge beat. Now, last month, the prior for November was revised slightly lower, so we're still getting those downward revisions, but I think it was only 10K. So I'm having my second cup of tea this morning. I'm trying to get a little kick from green tea caffeine. Unemployment rate dropping. Fed sort of looks very foolish at this point because we have inflation still climbing and you have the yields just skyrocketing. Average hourly earnings are down a bit from previous, but still with consensus. So earnings still hanging in there. Year over year, 3.9, expected to be 4, but still, year over year earnings. I mean, that's not disinflationary. Participation rate holding in there steady. Average work hours weeks holding in steady. So all that government payrolls in line with previous. Manufacturing payrolls continue to drop. Private payrolls was a huge beat. Also, U6 unemployment number dropping also. Now, what else do we have today? We have the consumer sentiment numbers for January, the preliminary numbers, and also pay attention to inflation expectations. You have the preliminary to short-term inflation expectations are 2.8%. The 5 years, 3%. So keep an eye on that. That's at 10 a.m. Eastern. So in about 53 minutes. And then that's really about it. It's really about it. Everything went really red. Besides energy, because oil's screaming to the upside, but everything real red after the unemployment report, especially because a lot of companies still have to roll and finance debt coming up. A lot of debt has to be refinanced in 2025, and rates aren't low. And they're just going higher. So what do we see? We see pretty much everything. Basic materials is slightly positive. Energy is up 123 basis points, and technology is taking the buttons. So is real estate because we're going to get higher mortgage rates. Remember, mortgage rates track the 10-year. We already looked at the Fed Watch. Fear and greed still in fear. If we break some of these critical levels, could we drop to extreme fear and then watch for possibly a short-term bounce? We shall see. That's really about it to cover with that. In terms of earnings, we have Tilray, Delta. Oh, by the way, KB Homes was delayed until Monday because of the Jimmy Carter's funeral yesterday. Boy, can't talk. Tilray was a miss. Thank you for putting this in, Sterling. Dallas. Delta, DAL, Dallas. Delta Airlines. was a beat and gapping up. Walgreens Boots Alliance was finally a beat. Still a slight gap up on that, but that company is really struggling. Constellation Brands, keep an eye on this. If you're in this, I would not be in this personally because it's not got a strong yield and it's breaking down from very key levels and it lost to 200. We'll take a quick look at that chart. But Constellation was a miss on earnings, a beat still on revenue. All right. Did I? Yeah, thank you, Royal Palms. Burr, that's all the comment I get. Richard Burr, are you cold? It was chilly this morning. It was 38 degrees here. 38 degrees. It's when we have a freeze warning through Sunday. We could actually drop below freezing potentially. Parts of the valley are. Good morning, John. Like I'm complaining about that because some people are in like single digits to zero. Oh boy. All right. So we had a bigger sell-off prior. People are still trying to buy this dip with yields. Let's take a look at yields real quick. I mean, look at this. By the way, I did the other, here's where this red line came from, the harmonic line. I'm just trying to teach you what I do. From these lows back in September, this is a reverse harmonics, the highs in April. Why those? Because this is the lowest low, and this was the highest high before this breakout. Okay, and that happened to, remember, I've had this other line on there. That just happened to reinforce that area, and that's exactly where we've run up to right now. 4.82. So, this is a major top area. Keep that in mind. But we're trading 4.76 right now in the yields. And as yields climb, stocks should start dropping. These dip buyers I think they're going to regret it. But still, we dip below the key critical level, this 59.15, and snapping back. So, what are we looking for today? What are we looking for today? We came right back down here. Remember, watch the candle bodies. Emotional candle closed, then the snapback rally. Look where we spiked down to today. So, the two levels I'm watching, and I'm watching still for rollover plays, unless the consumer sentiment numbers come in really wacky and people still want to buy this dip. This 59.15 is critical. If we did continue a rally, it's about 59.35, 59.37 to watch for a rollover play. I'd be paying attention to in the minor, I'd be paying attention to the 1 hour descending rotation zone. Okay, that's the minor stuff. So that's what I'm watching. Unless, again, I can't really get anything real bullish unless it can start holding about 59.23, and this is only minorly bullish, and then that would be the 59.35. But I'm focusing on rollover plays. We have the declining rotation zone. Remember, we've been in bearish mode since the 18th. And pay attention also to weekly. We're right at the bottom of the rotation zone. Now, I'll start shift to bearish mode on the weekly if we close back below the Monday, December 16th low. I'll shift to neutral if we close below the rotation zone. We are getting the weekly cycle bottoms though, but we're not bottoming yet. So we're in a very critical area. You're not impressed with the freeze warnings, huh, Richard? Good morning, Heinrich. Sterling, you're expecting 5 to 6 inches of snow or ice event. Well, stay warm, and ice is worse than snow. Man, when I lived in Dallas, getting hit with Dallas got hit yesterday, but when you get hit with ice storms and the roads were just pure. I mean, snow, at least you can navigate. With ice, that's horrible. NASDAQ, again, dipping below the 21,150 area and trying to snap back. We still got the dip buyers in here on a rollover play. You see here, again, focus on candle bodies. That's not where I wanted to draw the line. I wanted to draw it there, straight that level. So I'm focused on about 21,150 and then 21,050 are the key levels to the downside. Minor resistance of 21,200. Major resistance coming in about 21,250 on any snapback rally. Okay, so that's what we're looking at there. And the bigger picture here, The bigger picture trading against this very key low support area, but this, again, in bearish mode. So watching for any rallies for rollover plays, and the NASDAQ still holding the weekly rotation zone. The weekly rotation zone is essentially at the lows from the week of December 16th. So pay very close attention to that also. The Dow did break briefly a key support area, but not the lows from the beginning of November, from the election week. Okay, it broke this most recent support. It broke the lows from January 2nd, which were slightly lower than Friday, December 20th. But again, it's trying to hold in here. If we lose this low area of 42,450, it's 42,100 is the next key harmonic lower. Again, on any of these, I'd be paying attention to the 1 hour rotation zone, which is separating again. That's what I'll be watching. Boy, if I can click this morning. Russell also breaking down, setting a new low below the lows of Friday, December 20th, and also temporarily losing the 200 SMA. Remember, this double top, we bounced off the first target multiple times, little bounce in the rotation zone, and then rotating down lower. We still have targets lower of about 2,180 and then 2137. So I sound like a broken record. Well, watching for rollover plays also in the Russell. The VIX slightly elevated, but not a lot of fear coming in. The DAX, not much to talk about there. We still have the massive double top. In the short term, I'll be watching if we break back below 20,280 to the downside. Other than that, on any rally, it's back 20,623 is very key. We already looked at the notes rolling over because yields are climbing. Well, we looked at yields, actually. But coming down to the next harmonic area. Remember, we've had this on the chart for a while, 107.13. We did have the potential double that never triggered. And the rotation zones so far held. So we'll have to wait for a positive bar to get our next major projections. But if we look here, we're trading against, look at this very major support area. We're trading against very major support right now. We break below that. Look at that. That we haven't been at this since August of 11 area. It could get very interesting then. So do keep that in mind. Again, we'll probably get bounces. We're going against cycle bottom, so we're going to probably see some consolidation coming up soon, possibly heading into the Fed meeting in a couple weeks. But I would not be trying to go against these trends. So we've already looked at the yields. Again, if we break through the 4.866 yield, we're looking at 4.918 and then possibly 5.03 to the upside. Very key support coming in. The support levels keep climbing. So 4.65 to 4.7 is now your very strong support area. The 2 years, which you don't look at all the time, I have the reverse harmonics on here. Why? Because the 2 years trading against the high from May and breaking above that. So the 2 year next target's 4.48 and 4.63. So really, I'm going to be watching for this 4.5 area on the 2 years also. What else? A dollar index. Still looks like we're going to close on a weekly basis now above the 62.5. So which shifts the probabilities that we could be higher for longer. We have to check if the potential double top, again, that never confirmed or triggered off the table. We have 109.71. What was the high? 109.69. Technically not off the table right yet. You have a very strong thing here, but I would be shocked if this would trigger. Technically not off the table. Crude just screaming higher. Look at this. Not disinflationary. So, going to be watching to where it closes today. because this could be the highest close since back in August, potentially. Now, as I talked about, which will come out next week, we are still in a massive consolidation pattern. I'm going to be watching for a short-term top to come in and then a pullback move. But that pullback move is really going to tell us something because we've got rising rotation zone and very key support around 74.50. Especially with this, we're breaking above short-term resistance. So this is going to get interesting with crude. Very interesting with crude. Gold starting to really break higher again. Because we're closing in on that 62.5. We do have cycles at the top, so we might see a pause. But I'm watching 27, 29. Because we close above there, shifts the probabilities, and any pullback I'll be watching because this is based off a long-term correction. Longer-term correction. You see here on the monthly, holding the top of the rotation zone. And we had to I put this in the sideways category of the overall monthly correction. Going to be watching for another break higher in gold, as I said. We could see consolidation or a pullback into January. I'm watching for a break higher now. Silver, here we go. After hitting the second target yesterday, stop raise yesterday, third target hit, closing in on the fourth target. If you wanted to try to do something more with the little mini pattern, I will be watching if we close above 31.76. Now, what's interesting with this for me, we have cycles at the top and very overbought. I'd actually be looking to unwind. This is the way I'm looking at it. To take, again, since it's silver, it's got to leave something in the core on there. But unwind more than less and then watch for the pullback, any kind of pullback play, especially if we close above 62.5 to reestablish more of a run up to get even better reward to risk for a continued move higher. But that's how I'm using the short-term harmonics from a high in December back to the pullback low on the 19th. So that's the 12th to the 19th. And I'm watching the 62.5 level right at 31.76. If that helps anybody out. Copper continuing to move. Now, copper's now the same thing. Going to be watching this for a pullback. We're getting overbought very strong. So I'm going to be watching to see if it holds this 4.27 area. Look at the yields on the yen. Look at the yields on the yen. Look at this. Breaking out yields on the 10-year on the yen. 1.198, so roughly 1.2. Again, highest it's been since May of 2011. That's got to start being putting some pressure on the Bank of Japan. And you see here, climbing up very strong. The yen continuing to weaken. Still has not hit the next magnet price yet, but hit the next 1.158.89 harmonic. We still have 159.15. What else do we have? Let's see who else is here. Hey, Grand Rising. Just had to watch the beginning of the live because I joined late, and man, does Mike sound bearish. I'm not really bearish. I'm watching for things. I can't be that bearish yet. Until we trigger some of these patterns, I can be short-term looking for downside, but the market's trying to keep buying the dip. If we trigger some of these major patterns, like on the S&P, which we have not triggered yet, then I'll get more bearish. And on the NASDAQ, then I'm not that bearish yet. Yeah, I think we're going to see some major issues with the insurance that has remained there. Isn't the thing with inflation the market is the only game edge in town? I'm not understanding. Let's see. Not all of them. Not all of them canceled. I mean, there's still going to be some massive payouts. They might find some loopholes to try to get around that, though. Let's take a look at stuff else. What else do we have? We have the spiders. Again, key, I'm just using the prior harmonics. So we're going to be watching 584 for any breakdown play. And then on any rally play, we have 587.65 area. And then we have the open to Wednesday's open, 589.49 on any gap fill. Again, we have the potential double top in here, which has been confirmed but not triggered. The Qs, same difference. If we rally back, we're trading 510 right now. I'll be looking at about 514 and then the gap fill to 515.27 on the upside on any rollover play. If we take out Wednesday's low, 510.57, then 509.30, and then a breakdown play to retest the lows from the second. What else? We covered RSP and then DXC. RSP turned into a triple bottom from the double. And NDXE, remember, if NDXE closes below 76.52, the potential double is off the table there. Tesla, again, we still got dip buyers coming in. And remember, as yields climb, the equity risk premium, when you can lock in returns, sort of risk-free returns at higher yields, especially on the 10-year, and the market priced at these kind of PEs and price to books and everything, you're better off locking in possibly 10 years of yields. So, but the market's not pricing that in yet. Just search equity risk premium if you don't know what I'm talking about. Okay, NVIDIA, still nothing to talk about there unless we trigger the massive weekly double top. Weekly, please. There we go. But that's still not triggered. That needs to close below 134.7. Sorry, below 126.86. Broadcom, we still have the potential daily double top. This move did not invalidate it and is trading close to the bottom of the rotation zone. So I'm paying attention to today if the rally fails and we get below 221 again. What else do I have? TDM is gapping up to set up potentially double top on the daily weekly. So does the liquidity and the underlying affect probabilities? Yes. The thinner, you had DTM. The thinner the volume, the probabilities go down. I found that. That's why for most of the testing with equities I've done, it had to trade a minimum of 1 million per day average. Now that's close, but again, you're not going to trade this unless it breaks below that key level. So it's gapping up into double top territory. What is let's see. Just looking at something. But I would not be going short this unless it actually triggered that double. So you can pull back to the rotation zone. Now setting up, this is going to be a beautiful double on the weekly too. But it may never trigger. Again, if this keeps running higher, you're going to be looking at the reverse harmonics. Up to 113.47 possibly. It's putting too much pressure on the yen because of the amount of debt and the amount of they've bought too many of the 10 years. It's putting in a normal environment it would, but not in this environment for the yen. They do not want this to weaken. And they can't fight both. They can't try to contain yields and strengthen the yen at the same time. The best way to keep up with inflation is the stock market. It can be, but guess what? Once yields climb a certain way, it's going to shift into yields versus the pay attention because the stock market's incredibly already overvalued. So buying it up here, you're on your risk adjusted returns and your inflationary returns might not be that good. You have a wonderful weekend too, Andrew. I already covered gold, dark screen. And you want to know, yes, there you go. Thank you for putting that in there, Sterling. You want to know what's interesting on that? Historically, based off valuations like this in the market, the 10-year return on average for the market based off these valuations is slightly below zero. So let's say you could lock in. Let's say we get to 5% on the 10 years. If you could lock in 5% for the 10 years, okay, versus the expected return on the stocks based off these valuations are zero, what would you do? I'd lock in 5% on 10 years. Now, that's based off historical data. Does it have to repeat? No. But the market's shrugging off everything like this. That's what's so fascinating. All right, let's see where we got the market opened right now. Little snapback rally. Very bearish tick opening. So, again, what do I watch for? On the bounce, I watch to see how strong the S&P bounces and then I watch for the rollover plays. Okay? Now, do not ignore, because I will not be ignoring. If the market wants any hope, it's going to try to key off something today with the consumer inflation expectations. So keep an eye. That comes out in 29 minutes. If they come in better than expected, the market might try to do a little snapback rally. But if it comes in worse than expected, pay attention to that to the downside. So market's not liking this going into the open. What am I watching for in the short term then? This is where I'll use the harmonics and seeing it's pulled back to between the 50 and 62.5. If we continue to close back below 5,900, I'll watch for a retest of the non-farm payroll spike lows. Thank you, Coco. We've all watched too much thoughtful money. Well, at some point, you know what? The market can shrug stuff off. It can't shrug stuff off forever. And also remember, your Schiller PE trading mid 37s, 37.5. This market is not cheap. It's also why Buffett's got a lot to cash. Because there'll be a time when you can get some decent buys again. I wanted to check Apple real quick because Apple breaking very key support against the 50 now with this move. Where's my 50? Where'd my 50 go? There it is. See? Breaking very key support. So you're getting more and more bearish signs from the mega caps. Not with Meta yet. Google. I got an annoying fly in here. 185 is very key for me on Google. Microsoft. Not much to talk about there. I'm just looking at some of these other ones. Keep it just in that. Oh. Just looking at a couple things here. People are still trying to buy this dip. Tesla up a slight, but we'll pay attention to yesterday or Wednesday's high. the stock market will hold up till it doesn't. Again, you have passive flows. The other thing keeping the market up is you still have a ton of passive flows. So remember my thing. Daily, short-term bearish. Weekly, if we close below the weekly rotation zone, we go to neutral. We have not triggered the major topping patterns yet. If we trigger the major topping patterns, I'm going bearish in the short term and seeing how this reacts. Because could we easily pull back even below 5,700? Yeah. Is that the end of the world? No. With that, I shall talk to everyone. I shall talk to everyone on Monday. Have a wonderful, wonderful weekend. Bye for now.